Hello, chart watchers, and welcome to this Tuesday, July 23rd, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on. We're getting a lot more earnings reports out. Dow Jones Industrial Average currently up 46 points. The S&P 500 up 5.5. The NASDAQ down about 2 points, and the Russell 2000 up 2.5. So a little bit of a mixed bag here. The 10-year Treasury yield was up a couple of basis points earlier, currently up just one at 2.05%. Volatility index starting to roll back over again, really struggled where it had struggled earlier in July at about that 14.5 to 14.75 level. Materials actually leading the market today, trying to make a breakout above the early June high. Financials also doing well with that slight uptick in the 10-year Treasury yield. Consumer staples, which had been down the last couple of days, still remains above its 20-day moving average, having a pretty good day today. And industrials rounding out the top four among the sectors, up about 0.5%. Banks and asset managers, two of the leaders within the financial space today. You can see both making breakouts here. Very encouraging because financials had been lagging heading into 2019, but we're starting to see some strength in a couple of key areas. Airline stocks also performing very well today. This is a group that's been doing extremely well. I look back over the last month, and among industrials, truckers and airlines have been the top two groups. So it is encouraging to see airlines performing well. Among individual stocks, a lot of earnings are out. Here's two that are responding very well to their earnings reports. Hasbro in that toy space, it's been a leader in that group, even though the group hasn't been that strong. Hasbro, now we know why it's been so strong. Stock up $9 today. 117, great report there. Sherwin-Williams also making a big move. It has nothing to do with my house being painted, but Sherwin-Williams is up nicely, up 35 points today, making a breakout above that June high. So Sherwin-Williams having a good day here, not just short term, but I think longer term. We're going to take a look at this chart in a bit, but this would be a very nice breakout on Sherwin-Williams if it holds into the close. All right, Erin, it is Tuesday. Man, the earnings are starting to pour in, and they are going to accelerate the next week to 10 days. It's going to be hard keeping up with them.
That's for sure. It seems like there are a lot of beats, too, and not a lot of them that are, missing. So it is making it encouraging, as you were saying, too, for the market in general. I'm pretty sure you were talking about that in Chart Watchers last weekend.
Yeah, and I think I think the market goes a lot higher, and one of the reasons I believe that earnings are going to be stronger than a lot of folks think. So if you're looking at the PE ratios and saying, well, things are a little out of whack. Well, if earnings are growing, you're in a low interest rate environment. You've got central bankers ready to pour money into the markets if they have to. I don't know. I just think this is an environment where we're going to see earnings, not just earnings be stronger, but I think we're going to see guidance raised on a lot of these companies. And I think that will in turn lead to higher equity prices, but I guess time will tell.
As always.
Yeah, so this is Relative Strength Week. For those of you just joining in, we did have Mark Chaikin on yesterday, had a great presentation. Erin and I today are going to talk a little bit about relative strength and the RSI. I think a lot of folks get that confused sometimes. So we're going to take a look at that. And Erin, I'm going to let you take it away, but there are some interesting guests we've got coming up this week.
Absolutely. Relative Strength Week is continuing. Gaddis Rose will be with us tomorrow. On Thursday, Arthur Hill and Julius DeKempener will join us for a roundtable. And David Keller will also be on camera with us on Friday. And next week, August Seasonality will be opening the week. And Mary Ellen McGonigal and Dave Nadig will be in for ETF Corner, something new on Tuesday. And we have Jake Bernstein here for Wednesday. So great week and weeks coming up. We will start with that relative strength versus the RSI right after our technical news. 10 and 10, first symbol is going to be Booking Holdings, BKNG. And then we will do momentum sleepers. I have a handful of stocks I think you should look at. And Tom will finish off the program talking about all these stocks that have reported earnings as of late or that are going to be reporting. All right, let's get it started. Technical news and headlines.
All right, sounds good. We did have a couple of reports out this morning, both in that home construction area, and neither one of them very good. May FHFA house price index rose 0.1%, below the expected 0.3% climb. And then June existing home sales came in below expectations. And so not really good news in the home building area. We'll take a look at their chart in a minute. But first, let's take a look at the 10-year Treasury yield. We did get up above that 20-day moving average, came back down below it. Now we're trying to get back up above it. As I mentioned, I think yesterday's show, I'm kind of watching this area up above 215 to about 217. I think that's going to be a key area of resistance. You can see the 50-day moving average dropping below that level now. And when we look back all the way to the March high where we went up above that 50-day, we have not been able to close above the 50 cents. So if we can get through the most recent highs back in the second week of June, and then also in mid-July here, 215 to 217, if we can bust through that, get through the 50-day, then perhaps we'll make a bigger move in the 10-year Treasury yield. But until we do that, I'd be a little cautious to the downside. Let's watch this 195 level where we found support in early July. In terms of earnings news, and they are starting to pick up. There are a ton of earnings coming out. These are just the key earnings reports that you see on your screen. The first being Coca-Cola. Most of these earnings came in pretty strong. There were exceptions. You can see Travelers down there at the bottom, missed by a wide margin. This is one of the worst performers in the S&P 500 today because of that miss. So, but there have been, for the most part, as Erin mentioned at the top of the show, there have been a lot of beats. I would say the majority of companies are beating estimates. Many are raising guidance. It is still early. We've got a couple of big companies coming out later this week. We've got Facebook, Google, and some others. Be sure you check that poll today because we want to kind of get the pulse of what you're thinking in terms of whether or not you believe these companies are going to beat top and bottom line estimates. So check off the companies in there on that poll that you believe are going to come out with strong results. I think that all of those companies are coming out over the next 2 days. So plenty of companies to watch for sure in terms of which way this market's going to go. Let's take a look at Sherwin-Williams. So this was what I was talking about. See this move here? Look at the volume coming in. I love to see these big volume moves where you clear overhead resistance. We have a double top, one from back in September of 2018, the second here in June of 2019. And look at this push to the upside here on Sherwin-Williams. Now we opened below resistance. So what I don't want to see is a false breakout where we come back down and close beneath. If you look down below, and we're going to talk a lot about relative strength today, but here is Sherwin-Williams versus the specialty chemicals index. And you can see with this move, it's breaking out to a new high, but specialty chemicals relative to the S&P 500 has been moving lower for the last several months. So if the company fails to make the breakout, I'm going to be much more nervous about it than I would a company that's part of, say, the software group that has been moving up and has been very strong on a relative basis. So yes, I love what's going on here with Sherwin-Williams right now. And the other thing I like to follow too is what happens if all of a sudden this group starts to lead. We've seen it really over the last 2 weeks, but let's say we get back to a multi-month high in terms of relative strength, then I think it's going to be really important to identify a company like Sherwin-Williams as a leader, a relative leader. And this is how we know, because it is breaking out to a 52-week high versus its peers. Coca-Cola, mentioned this one at the top in terms of its earnings. Look at this reaction. Coke already trading 18 million shares today, on pace to perhaps go up to 35 million or so. When you look back, haven't been too many days with that kind of volume. So I think we're getting some accumulation here. Coke over the past several months has been showing relative strength versus the soft drinks area. And today it's certainly showing a lot of relative strength and some absolute strength as its peer group breaks out above 740. So this is a breakout in the group and also Coke leading to the upside. So I think that's a really good sign. United Technologies, UTX, also came out with good results, gapped up, pulled back, currently up 29 cents. It was up a lot more earlier. When you look at this one, though, relative to the aerospace group, it has been going down, and aerospace stocks relative to the S&P 500 going down. So this one I'm a little more concerned about with that failure on the gap up and the pullback. Still a great company, but in terms of relative strength, I'd be a little cautious. I'd look maybe about this 129, 130 level. There's no reason for the stock in a good market environment to drop back below this level. Double bottom, both moving averages. I think if you see a close below 129, 130, I'd probably be looking for something else. And in the aerospace group, HXL, I'm going to talk about this one a little bit later, but I did want to mention, look at the volume coming in on this stock over the past couple of months. Really strong volume bars. Look at HXL relative to aerospace. This is a much, much stronger stock relative to its peers. Great volume, breaking out. To me, a stock like this looks much better than United Technologies. I mentioned earlier the home building group. So let's take a look at what's going on here. Two bad economic reports today. This is a weekly chart. And the reason I brought this up is when we were downtrending, if you recall, I kept talking about making sure we could get through that 20-week moving average before I would grow more bullish the group. It took almost a year to do so. We finally did it to open 2019. And if you look, we have been holding this rising 20-week moving average now throughout 2019. But currently, we're trading at 788. The 20-day moving average is 792. I don't know where we're going to finish this week, but it's something to keep an eye on because we are seeing a little bit of deterioration in these home building stocks. In addition to what I just showed you on the weekly chart, I think if you look at this daily chart, there is a little bit of a head and shoulder pattern. You've got the left shoulder, neckline, a little bit higher high puts in the head. You got a down sloping neckline, which makes me a little nervous. Here's your right shoulder, which is also down sloping from the left shoulder. And now we're rolling back over. And the volume hasn't been light here on some of these selling days. So I would be really careful on the daily chart at 770. And of course, what I just talked about on the weekly chart in the 780s. So I think home construction, it's still okay, but I'd be a little concerned if we break, especially this neckline down around the 770 area. All right, let's take a look at the dashboard. And I wanted to go over a stock that I just mentioned, Sherwin-Williams. Look at the leader over here. Sherwin-Williams up 38 points. So even if you didn't follow earnings and all you did is you just came into your dashboard here at StockCharts, you could quickly zero in on a stock like this. Sherwin-Williams, look what's second, Coke. Then you got the Stanley Black & Decker. All three of these companies have reported earnings. I think Avery may have also reported earnings. AutoNation yesterday reported after the bell, I think. So here, great reaction to the stock, but I want to focus on Sherwin-Williams. So right here, you can see Sherwin-Williams making this breakout that I talked about earlier. It is a longer-term breakout as well. I'm going to pull up a long-term 15-year monthly chart, and you can see this is a stock that has been a continual outperformer, goes through periods of pullbacks, but really this 20-month moving average has been holding with the exception of maybe 2 months since 2009. So Sherwin-Williams has been a great performer, and that's why it is my scooter mover of the day today.
All right, let's go ahead and we'll look at a few upgrades and downgrades. There are a couple of interesting ones in here that I thought you would want to learn about. All right, our first one is Infinera Corp, INFN, and today it was upgraded by B. Riley to from a neutral to a buy, and their target went from $4.75 up to about $6. Let's grab that and take that down a bit. So that's where they're looking for it. I would look at it right there at that top. It's very close. I'm assuming that's why they picked that as their new target. So it is on a buy. I do like the look of this one. If you just take a look at the declining trend, there was just a slight declining trend going on here. Get that in there. And you can see we've got that nice breakout. And then if you look at where the gap that we had earlier came in, it was right about here. So I would say I would look for at least a gap coverage here. Whether we'll get that breakout or not sure, but I like this PMO. It's now in positive territory, out of very overbought or oversold territory. So I think Infinera looks pretty good, and I have to agree with the upgrade there. All righty, Murphy Oil. Now, of course, this area of the market has really been struggling, but Goldman did upgrade Murphy Oil from a neutral to a buy, and their new price target is right there at $30. So they're expecting a move to challenge these lows and the top up here. At this point, I'm going to show you where I think the next level of resistance is in the short term. excuse me, right back here, those lows from June, and we're really close to hitting that right now. I would watch that if we possibly get that breakout. The PMO still needs to turn around. If we get that turnaround on the PMO and it can leapfrog that 20-day EMA, I think that there's some possibilities here for Murphy Oil. I would just be a little concerned based on the fact that that hasn't been the best area of the market. All right, here we go with Snap. Oh, Snap. It was upgraded today from a hold to a buy by Stifel. $13 to $17 as their new price target. So let's go ahead and we'll put that in right about there. And if I look, where does this line up? Right back here at those tops. That is where they're looking for a move back up to that area. Let's go ahead and make this a little bigger. It looks like there's a Head and Shoulders possibly forming here. It did drop below that 20-day EMA, but it remains above the 50. I don't like that the PMO is in decline, but as you can see, the scooter has been very strong. So OBV, we're still getting rising bottoms on that. So in fact, let me just double check that right here. And there we are. Yeah, it's a slightly rising bottoms there. And that goes with, actually, if you look back here, these lows have actually declined. So that is a positive divergence. Watch for a move above $15. If we get that, I don't see any reason why we couldn't get up there to that price target. I think Snap looks pretty good right now. All right, let's go to Cadence Bank Corporation. This one was downgraded by two different agencies. Their price target was moved down to $18, which, let's see, that's going to take us down right about there. So the main reason it was downgraded, it was downgraded from outperform to market perform and buy to neutral by those two agencies, Keefe Bruyette and Goldman. We're trading all the way down here. Let's go ahead and look at this. So this is where we're trading, all the way down here. So, not a surprise. The question was to me, well, why is it failing so quickly and so terribly? Apparently that they are being looked at, excuse me, for some federal securities law violations. And I guess that would do it every time for you. So Cadence Bank Corp in a lot of trouble right now. I was surprised that it went to a market perform and a neutral rather than a sell, but it looks like you pretty much are sitting there at the bottom that we've had. Sprouts Farmers Market was also upgraded today. It was upgraded by Oppenheimer from an outperform to a perform. It certainly hasn't been performing well for a while here. Let's see what we can do as far as a declining tops trend line here. Actually, I think I might take it from back here. Yes, there you go. Let's see, where is it trading in regards to its lowest lows? It appears to be, let's see, whoops, I didn't want to get that there. Let's go ahead and get that horizontal here. I'm curious, where does this line up currently? And if we go back in time here, all the way back in time, we have to go all the way back into 2015. And it looks like we're setting all-time lows right now for Sprouts Farmers Market. Not looking too good, and not a surprise to see it downgraded. My surprise is that it's downgraded from an outperform again into that neutral perform area. I guess if you're going to have this one turn around, this is the spot for it to do so. But as you can see, the scooter value has been declining. OBV tops are failing at the same time we're seeing these tops failing here on price itself. So not looking too good there. I would not touch this one with a 10-foot pole. I wouldn't even bother to put it on a watch list, even though it's hitting those all-time lows. I prefer to find something with a little more strength, as we're going to talk about relative strength later. All right, so the last one I have is Vive Medical. This one was downgraded today. They had a drug that was unsuccessful, and Stifel, Raymond James, and Maxim all downgraded it to basically the hold position or a neutral position. Of course, this is a very low price stock. You need to be very careful. We're looking at the pennies here. There was only one, let's see, target, and that was to $1. So that's up here. So even with a neutral position here, if we can get that as an island formation and get it back up, but look at the PMOs, turned down and given us a sell signal in negative territory, quite a bit negative. All right, that does it for upgrades. Downgrades, here are the ones that I just went over along with some that I did not to check out for you. And we will be right back with relative strength versus the RSI.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
All right, we are back. And again, it is Relative Strength Week, and this is day 2. Tom and I decided we would talk about the relative strength, but we would compare it a little bit to the RSI. These two concepts, indexes, and the the various ways you can find relative strength, they're very different, and we're going to talk a bit more about that. I did give this workshop, I can't remember how long ago, it might be on YouTube, but I thought I would just go through basically the definition of relative strength, how you can measure it, and what the RSI is and why it's different. And then I know Tom will give you some concrete examples. He trades and looks at relative strength charts all the time. And I know you used to use the RSI quite a bit as well. So I think that will be great to pass it to you for that. All right, so we'll get right along started here. So I'm going to cover the definition of relative strength. We'll look at some of the indicators and tools that you can use to measure relative strength. And then we have our price chart, price relative chart settings. I'll show you how to do that. And then we'll look at some perf charts, and if I have time, a little bit of RRG. But I do want to give Tom plenty of time to show us how to apply these various thoughts. So here we go. What is relative strength? Well, basically, it compares the performance of one security to another. So you're just basically making a comparison. Which one is stronger? Which has the most internal strength, which one has the best momentum. Those are the things that you use to find relative strength. And these are the indicators that you can use. Many people probably aren't familiar, but you can use the PMO and the PPO values to rank stocks as well. I don't use that very often, but it is possible because both of these have been normalized so that they are bounded to some degree, the PPO more so. StockCharts technical rank, this is like do-it-yourself relative strength. It's right there for you. Price relative are the line charts that Tom often uses, and most people look at it that way. I do want to talk to you a little bit about what you see when you're looking at those. Perf charts actually are another way to compare at least a group of stocks, or in particular, we look at it for the sectors. And then RRG, Julius de Kempener's relative rotation graphs, basically are giving you relative strength. You plot all of these stocks or sectors or whatever it is you want, and you can make comparisons how they rank up relatively based on the S&P 500 and also among themselves. So let's go ahead and the RSI, I didn't mention that at all, did I? It is short for Relative Strength Index. So it is actually its own indicator. And basically, it's measuring the internal strength rather than the relative strength. The internal strength by measuring the speed and change of the price movements on the one issue that you're looking at, be it a stock, ETF, index, etc. So it's basically measuring the it looks at within a range. It tells you how overbought or oversold it is based on measuring the speed and change of price movements. It doesn't compare a security to a security. I mean, I suppose you could say this one's more overbought than the other, but in general, you generally don't use it for that. And like I said, the PMO and PPO can be used in that way as well. But, typically when we're talking about relative strength, we're not talking about the RSI. It's its own indicator, and it is bounded, so you can compare one RSI to the other. But I mean, it's not a typical thing to do. There are better ways to do it. Let's put it that way. This is the calculation. So you can find this in Chart School. I'm not going to go completely over this because I think, well, it's in Chart School. And as much as I love it as a math geek, I don't think I need to go into the details here. All righty. Next up, these are those tools I was talking about. Scooters will rank within a universe. For example, large caps, that group, where does that stock rank within that universe? Price relative setting, I'll just show you how to do that really briefly. Perf charts and the various settings, I can show you where to get to that pretty quickly. And then also the RRG. So I didn't mention the MACD at all. The MACD isn't bounded, so you really can't use the values of the MACD to make comparisons among stocks. Like I said, you could use the PMO for that and compare the values of the PMO to the values of the other stocks. But I think there are better ways to measure relative strength. So we'll look at those more deeply. So let's go ahead. I'm going to move on to, all right, so I'm going to start just with the dashboard, and this is where you can find the perf charts right there. And as you can see, it compares a bunch of symbols to each other, and you can just add whichever ones you want in here. This is the line chart, so it can help you see relatively the percent change. So that gives you an idea of which ones are performing relatively better than the others. And notice we keep talking about small caps not performing well relatively to the other large cap indexes. And I think this perf chart makes that pretty clear when you look at it, why it is not performing very well. I want to show you my basic relative chart that I have in my decision point chart list. And I think it'll give you a little bit of insight into what it is and how I'll show you how to set up those price relative settings. The thing I really want you to understand is when, for example, when we're seeing the tops moving lower, if we're seeing flatness, so it doesn't mean that that's what is happening to price at that moment. So the S&P 100 hasn't been declining since June 8th. It's not, but and when you relatively compare it to the S&P 500, it means it's just not performing as well relatively. And if it's flat, that just means they're pretty much traveling together. And in this case, with the Dow Industrials, it's telling us that price is moving faster and that the Dow relatively is performing better, not necessarily, again, that the price is rising, because this could happen even if the price is moving lower on both of those relative items, and one is just doing better than the other, and so it's rising, but that just means that the price is not falling as fast. So just be aware that this isn't really telling you what price itself is doing. It's just telling you how each item is doing against the other. For example, here is how you would set up your price relative settings. You can click on price, and then you get basically you separate them with a colon. But I do believe we have the other. There's price performance, and that automatically puts it against the S&P. So if you add that to the bottom, let's see what we get. There you go. So it's telling you what the percentage is for the S&P 500, rising its performance over that period of time that we're looking at. You can also do, let's see, the price up-down pair would be another one. But typically the one we use is the price, and you're taking the item you want to look at and then put in what you want it to look at relative to. And Tom has some great settings on his price relative charts. I'll let you explain them more, Tom, but I'm going to show just briefly what they look like. Well, let's pick something that will work here. Let's look at Boeing. And what this tells me about Boeing is how it is doing against, this tells you how well the actual industry group is doing in relation to the S&P 500. This is Boeing and how well it's doing within that industry group. And again, just because that's moving up in this way, it doesn't always mean that price is actually moving up. In this case, that is true, but just remember that that isn't always the case. So these settings look really weird, but I'll let you go over your actual settings, Tom. This looks really strange. I have a strange chart style for you right here. All right, so let me go back really quickly here and, oh, I was going to show you an RRG very quickly. Let's do that. And those can be found also over here, RRG charts. And there you go. So I'm going to select, let's look at the sector ETFs. And there you go. So basically, it tells you, looking at all of these, whether they're weakening, leading, improving, and lagging. So you're getting a relative strength comparison just by looking at an RRG. All righty. So just some of the takeaways that I want you to have before Tom gets into some of his examples is that relative strength is a comparison between one security to another. You can compare the actual values of the PMO, PPO, and RSI readings to other values with a stock, but it's just not really giving you the kind of information necessarily that you need. But you can use it for that. The price relative settings, I showed you how to do that, but Tom will show you more about that. And then as far as price performance charts, I showed you that perf chart, how you can set that up. And then RRGs, that is really great because you compare up to 50 symbols. And the perf charts, you can only use so many groups to look at. All right, Tom, I'm going to give it back to you to show some really great examples because I know you use relative strength in your analysis all the time. And I know you used to use the RSI on your charts. I don't think, do you continue to have that on there? I'm thinking that you do.
Yeah, I do. I use the RSI. I don't use it a lot. I actually scan using the RSI a lot of times because when stocks are in uptrends, a lot of times I can find an RSI that when I use an RSI scan, say between 40 and 45, that's generally where you find bottoms on the RSI in an uptrend. So I do use them on my charts. I generally have them on there. I actually added stochastics to this one as well, just to kind of give a little difference there, even though we don't really want to talk too much about the stochastic. But I'm just going to pull up a chart here, ACOM Technology, ACM, so that we can talk a little bit about the RSI. And then I'll get into the relative strength and show you some differences there and how I use that. Here, there are a couple of things I wanted to point out on this chart. Number one, the RSI, it's just a momentum oscillator. So as Erin said, it's really just it's looking at internal strength of a stock. It's comparing it against itself, really. It's not comparing it against any other security, any benchmark, anything like that. It's simply looking at the price action over the past, well, at least the standard reading is the 14 days. So it's looking over the last 14 days, and it's adding up the gains on any of the days that go higher, dividing by 14, and then it's adding up the losses during that 14-day period and dividing by 14. So even though you only have 2 days here in this period where it went up, you don't divide by 2, you divide by 14. And then on the way down, those 12 days, you add up the losses and divide by 14. And it's really a comparison of those two, the averages of those two readings. So when you've got a lot of selling taking place, you'll see that the RSI goes very low. When you've got a lot of buying throughout a period like this, you'll see that the RSI gets very high. So 30 to 70 is kind of the range that most people acknowledge as being oversold, 30, overbought, 70. I tend to look at it a little bit different. I think when you get a stock that's in a solid uptrend and it hits 70, I wouldn't necessarily be thinking I'm going to sell. Sometimes that works beautifully, as you can see back here in November. Other times, not so much. I mean, here it hits 70. Just as it's making this breakout, you'd have missed another 10% of the move if you get out when it hits 70. So it can remain overbought. I tend to look in an uptrending stock, RSI overbought maybe in the 70 to 80 range. I think if it starts getting up to 90, that's probably pushing the envelope a little bit. To the downside, 40 is generally a good area of support during an uptrend. And that's why, again, I like to run scans in that area. But you can see here we got oversold back when the stock was maybe at about 27, ended up going down below 25 before we actually bottomed. So I'm not a big fan of using this as a timing mechanism to try and get into a stock or out of a stock. I think if you do that and you have stops in play, you're probably going to get whipsawed as much as you actually hit, and it works for you. So I use it more as confirmation. So if I like a stock, for instance, I'm looking at ACM now. It's made the breakout in June, very huge volume. If this were to pull back and hit these support levels, it probably would show up on a scan. If I run a scan, RSI 40 to 45 or 40 to 50 or maybe 35 to 45, if I'm running a scan of RSIs in that area, a lot of times I'll pick up a stock like this when it pulls back and potentially could be getting close to a key price support level that I like. So that's how I use the RSI. But the key takeaway for me is that the RSI is not comparing the stock against anything externally. It's simply looking at that security, and based on that momentum oscillator, based on a formula, is it overbought or is it oversold? And that's all really you use it for. I know a lot of folks involved in the market, and I start talking about relative strength, and they're like, well, that's the RSI. And I'm like, no, it's really not the kind of relative strength I'm talking about. The other thing I would say is that when I do use the RSI, I generally use it in conjunction with stochastics, because stochastics tends to move up very quickly. And you can see here, we move into overbought territory on stochastics very early in the run. A month later, it's still going higher, and you haven't gotten overbought yet on the RSI, yet stochastics is telling you that you've been overbought for a month. I'm not sure I really follow the whole stochastics crowd. Again, maybe as confirmation with the RSI, if they're both telling me overbought, like you can see here and here, then we did actually top. You get over 80 here and get up a 70, 80 here. You can see we generally got to a key area. And by the way, that was right at resistance. So you had a lot of things lining up there. But just to use one momentum oscillator as my reason to get in or out, that wouldn't happen. To me, these are secondary type indicators. So that's the RSI, Relative Strength Index, not relative strength. So make sure you understand that. Now, as far as relative strength, as Erin was mentioning, it's really taking one security and comparing to something else. I usually compare it to a benchmark, but you can compare it to anything. You could take McDonald's and compare it to Pepsi and see which one's going higher, which one's showing better relative strength. So let's pull up McDonald's and Pepsi. And we'll switch from a candlestick chart. Candlesticks, I don't think work very well with relative charts, price relative charts. And we'll go out a little bit further. Let's just go back the last couple years. And so when you look at McDonald's versus Pepsi, now I don't know which way they were going. I don't know if they were going up or they're going down. But what I do know is on this price relative chart, McDonald's was performing better than Pepsi. Then for about 3 months, it underperformed. Then we went through about 5 months, 6 months, outperformed. Then we were underperforming. And now we're in a period where McDonald's is outperforming Pepsi again. So that's a very simple price relative, where you're just taking two stocks that you might, whoops, actually I have McDonald's. I don't know why I have McDonald's in there with Pepsi, but let's try Coke. I guess we could do McDonald's with Pepsi. You can do it with any one you want. I know the chart looked kind of similar to the one I had looked at earlier. Okay, so let's go back and do Coke and Pepsi. This one probably makes a little bit more sense. So Coke goes through a period of underperformance. It outperforms, underperforms, outperforms, underperforms. And now, again, you can see that Coke is beginning to outperform Pepsi again. I think that's important because if you look at the soft drink index and you see that it's breaking out, and it is, let's pull the index up. So it's breaking out to a new high. The question is, all right, what stock do I want to get? Well, if you're looking for where the money's rotating to, that the stock that has the leadership right now, it's Coca-Cola. So another way to look at it would be taking Coke and comparing it to soft drinks. And you can see Coke is outperforming the group. So we already know soft drinks are breaking out. This is telling us that Coke is outperforming the group. And I think that's really important. When you look at Pepsi, we might have outperformance here, but it wouldn't be as strong. No, actually, we are moving the other way. So we had strength, but once that started to break down, you really wanted to make the switch. And that's something that Mark Chaikin talked about yesterday, making a switch when you see a company that begins to lag on a relative basis versus another one that is outperforming. So if I was holding Pepsi and I'm seeing this underperformance for 2 or 3 months, and then I happen to go back and take a look at Coke, and I see over the last 2 or 3 months the outperformance, that's telling me I probably want to be in Coke, not in Pepsi. So that's something to, again, keep in mind. All right, let's take a look at some foreign markets. I mean, you take a look at something like the EAFE ETF. Now, this is an ETF that tracks mid to large cap foreign stocks, excluding Canada and the US. So if you really want to take a look at how foreign companies, large companies, are doing relative to the S&P 500, this would be a great relative strength chart to use. And you can see that since December of last year, it's been going straight down. And what you notice is that when we had a lot of weakness here in the US, remember December, we had that big drop in the US? Well, foreign mid, large cap stocks were outperforming. Look at the end of May. Remember, we had the drop in May. Last half of May, I think the S&P dropped 4% or something like that. Again, we saw outperformance. Now, it doesn't mean that that was necessarily going higher. It just means that it was outperforming the S&P. So the S&P may have dropped 4% in these 2 weeks, and the EFA may have only dropped 2%. So you see outperformance. But the key here, the takeaway, is that over time, the foreign mid and large cap stocks have been underperforming the S&P 500. So until this changes, I would be sticking with the US stocks. Now, you look at this and you see it going down throughout 2019, the relative strength of these foreign mid and large cap stocks. But if we go forward, take a look at their absolute strength. And this is something Erin talked about. It's going up. They're going up, but they're not going up as fast as the S&P 500. And for me, if the S&P 500 is going up X, there's no point in me trading if I can't beat the S&P 500. So I want stocks that are outperforming. I want areas of the market that are outperforming. This is not outperforming. I would quickly toss this to the side. And I'm not talking about these little brief moves to the upside. I'm talking about sustained movement in one direction or the other. Let's go back throughout the bull market. Look at 10 years. And so you can see, oops, that's not what I wanted. We got to get that relative chart. So the overall, the EFA was going up, but look at the relative strength throughout this entire bull market. It continues to move lower. So yes, we see a little bit of strength to the upside, but it's not confirmed. We turn around, we go right back down. I think this is a channel that you want to watch. And until we get a sustained move in the EFA above the S&P 500, this is not something that I would really consider. Now, I looked through a lot of the different foreign ETFs to try to find some, because everything really is downtrending versus the S&P 500. But I wanted to look at the EWL, because this is one that is maybe starting to show a little bit more strength. So EWL versus the S&P 500. So this is Switzerland. And now you can see a little bit of a different picture. when you look at the EWL versus the S&P 500. We definitely have an uptrend in play. You got a higher high, took out these prior highs. You come down, you put in a higher low, you make another new high. This is different than just those quick little pops to the upside and then another move to the downside and a new low being set. So this is one of the few areas around the globe that I think actually, if I was going to consider investing somewhere other than the US, probably would be Switzerland because of the strength that we're seeing on a relative basis. How about China? Everyone, a lot of folks looking at China. Take a look here. I mean, we're down near a 2-year relative low. We can straighten this out. Let's take it all the way back 10 years. You want to invest in China? You're going to outperform the S&P 500 by investing in the FXI? Good luck. I don't think it's going to happen. Here you had one really solid year. Here you had a pretty decent year. Here you had about 4 months. But over the last 10 years, for the most part, it's going down. So not really something that excites me. And what I'm watching here is to see if we get another relative breakdown in the FXI. If we move back down below that September, October relative low, that just tells me we've probably got another leg down in China relative to the US. All right, so that's looking at foreign markets to the US. How about looking within the US? And so if I want to outperform the S&P 500, do I want to do it with material stocks? Well, looking back over the last 10 years, I'd say the answer is no. Yes, we get some periods where we do show some overall strength, but really it's been mostly a downtrend. We just had it 9 months in 2018, trying to stabilize. If we did make a breakout and I wanted to get involved in a material stock, I'd watch this relationship very closely. And if this started rolling back over, I'd be out. And if I got into a stock within materials, I would do something like Sherwin-Williams I talked about earlier in the show, because it's in the specialty chemicals area. It's leading that group. The group hasn't been that strong, but if all of a sudden that group started to strengthen, then I would look for a leader. That's how I would try to beat the S&P 500. But if the sector goes down, just think of it like trying to swim against the current. If money is rotating out of the XLB and into the XLK, which is technology, look at this. I mean, just take one look and figure out, okay, where would you rather invest your money? Where do you think you have a better chance of beating the S&P 500, in technology or in materials, based on what I just showed you? Hopefully you can see this uptrend, this relative uptrend, and say, well, technology for sure. That's what I would do. Now, taking it another step further, the dashboard, what I do is I like to use all of these different panels that StockCharts offers. I have relative strength sectors, relative strength industries right here. So I'm looking at, I can see today materials is leading the S&P 500. But again, when I bring that chart up, I don't know that I'm going to be overly excited about it. You can see mostly it's been in a downtrend. Maybe if I get a breakout up here, you can see the relative PPO trying to go above zero. That would be a positive. We haven't seen that in over a year, maybe a year and a half. So maybe if we get a breakout above all these highs, then maybe the XLB will be ready to go. But that's not really what I'm interested in. I want to get into the areas that are much stronger. So let's take a look at the industry groups. How about tires? Tires having a great day today. Am I interested? This is a ski slope to the downside for the last 2 years. I have no interest whatsoever in the tire index. And tires have been going down on an absolute basis. We've been in a bull market. So this is a group that's been very, very weak, not only on a relative basis, but also on an absolute basis. So you come down here and looking to see if any of these, this one, the building materials and fixtures group. Now this one had been downtrending for a while. You notice this one appears to be in a character change. Been downtrending for a couple years. Now it's uptrending versus the S&P. The PPO's gone positive. It's just pulled back. And if this uptrend continues, this is a group that should start to move higher from here. So this would be one that might grab my attention. Now I'll show you how, when I did my portfolio selection, one of the things that I look at are these character changes. And defense stocks, now I'm going to go back 10 years. And I'm just going to show you here on a long-term chart. Look at how defense outperforms the S&P 500. This is a 5-year period, massive outperformance. Now we're downtrending, but if ever you're going to take a chance, it's when you make this move back up above the moving averages. You pull back on a relative basis close to a moving average. The PPO, relative PPO, is now positive, which is where it was during the entire 5 years when you wanted to be in this group. So then what I do is I say, okay, well, defense looks pretty good. I'm going to go into my strong earnings chart list and pull up defense. Well, KTOS, Kratos Defense, is the only one that's in there right now. There were some others that just got pulled out because they're getting ready to report earnings. But KTOS, if I pull this chart up, look at the relative chart. This is my relative style. When I look at an individual chart, first of all, I like the volume making this breakout. That defense chart, by the way, do you see this breakout? It occurred at the beginning of May. So we're getting through the 50 at the beginning of May, probably middle part of May, we were getting above that center line. Well, right about that same time, Kratos, early mid-May, look at the volume coming in, pushing up here. So now all of a sudden you got a great looking stock. Look at the relative strength of Kratos versus the defense group. So now you've got one of the leaders in defense. It's breaking to a new high relative to its peers. And its peers here in mid-May was making a breakout 7-month high in terms of performance relative to the S&P 500. So this is a stock that actually ended up going on in my aggressive portfolio. I had 10 stocks. One of them was Kratos. And I didn't pick it actually until May 19th. So it was after all this moved to the upside. But right here on May 19th, it was picked. And you can see what relative strength does for you. The stock's continued to perform very well. It's down today, down a little bit, 1%. But overall, it's been a great performer. So that's how I use relative strength. I want to see, and most of the time, I'm using it relative to the benchmark, the S&P 500, because I want to see what is outperforming. And I also want to know what to avoid. I want to be out of areas that are completely underperforming the overall market. But here on Kratos, you can see I've got defense stocks, their absolute chart, which clearly has been in an uptrend. Then I've got Kratos versus the defense group. So I know that it's got relative strength to the group. KTOS relative to the S&P also broke out versus the benchmark. And again, if I want to beat the benchmark, I want to have stocks that are beating the S&P 500. And then finally, the defense group relative to the S&P. And we have seen a little bit, we've seen it back off a little bit, but we are holding the recent relative lows. I don't want to see it break below this double bottom, to be honest. If that happens, I'd probably begin to think about a tighter stop on KTOS. As long as defense stocks are going up, if we start to get another turn to the upside, I'd tend to maybe be a little bit more flexible in terms of holding a stock like KTOS because I have a leader and the group is starting to move back to the upside. All right, that is essentially what I wanted to cover. I mean, there are a number of different ways you can use relative strength. We literally could do a 10-hour webinar on this. If you've seen me do the 10-year Treasury yield here in the U.S. versus Germany, I don't use a colon, I use a minus sign. That also, you can kind of use a little bit. If you're getting some stocks with huge differences in price, the minus sign is probably not going to work very well for you. But if it's somewhat similar, like looking at Treasury yields here in the U.S. versus Germany, you can get a sense of relative performance in yields here in the U.S. versus Germany, which can be very important in determining what's going to go on with the dollar. It also, if our Treasury yields are going up and Germany's aren't going up as fast, it's telling me that the U.S. stock market probably is going to do better because the economy is stronger. That's what drives our 10-year Treasury yield higher. So there's a lot of different ways that you can use relative strength. I've just gone over a few of them. Erin was showing you the scooters, the RRGs. All of that is just a different way of using relative strength. But just make sure you understand the difference here between the two. RSI is simply looking at the internals of a particular stock or index, asset class, whatever, and just saying, are we overbought or are we oversold based on a formula? Has nothing to do with comparing it to anything else. Relative strength, completely different though.
Absolutely. I did have a few questions come out of the chat room. Let's see. Number one, they're interested in that relative strength chart list you were showing, 00300. Let's see, the other was, can you check relative strength in other countries like Canada? And I know that's a yes.
Yes, absolutely.
And then is there a scan that maybe you use for rate of change in timeframes, just to make some comparisons that way? I know I don't really. So
Yeah, I mean, I'll sometimes lengthen out my chart. Like if I'm looking at relative strength in a very short term, a lot of times my charts are 6 months or a year. Sometimes just to put it in context, I'll take it out further, like I did here over the last 15, 20 minutes, just to show. For instance, I showed periods where materials were outperforming for a year, but the long-term context is still in a downtrend. And, I'm comparing that, not just looking at relative strength, but also looking at different asset classes, looking at the dollar and what I think of the dollar. I believe the dollar is still in an uptrend. So that leans me away from materials, even if they start to show a little bit of relative strength. I'm leery because I think the dollar goes higher and the materials don't perform as well as the S&P during periods of rising dollar price, rising dollar index. So
sure.
but yeah, as far as I don't know if it was a relative strength industry chart list that they were looking at or the strong earnings chart list, but both of those are available at earningsbeats.com. Because I left there, I can't send it out. But if you go over there and take a trial subscription, you'll get both of them. They will send you both of those chart lists and you can use those.
There you go. And that pretty much completes it for relative strength versus RSI. So I believe it is time to move on to the 10 and 10.
It is.
All right. And I have been collecting, and we had, as always, lots of interesting requests. Here's relative strength among these group of stocks you all requested. Tells us which ones are leading, which ones are making the move into improving, etc. So you can make those comparisons. When we look at the requests, I found it interesting. We have a lot of industrials. I know they have been outperforming the S&P, the Dow has, so I guess not a complete surprise. And then, of course, lots of technology, particularly software. So the first one we're going to look at is Booking, BKNG.
All right, let's look at Booking, and you can see here, looking at the relative strength, Booking versus the S&P 500, you can see that that's a pretty clear overhead resistance line that I would like to see cleared before I'd have any interest here. So it's been okay. It's kind of going along for the ride here over the past 4 or 5 months, but I don't want to go along for the ride. I can just play the S&P 500 if I want to go along for the ride. I want to outperform. So I'm waiting for a breakout here on a relative basis in Booking. You can see relative to the travel and tourism group, it's just kind of going sideways, not really showing a lot of in terms of relative strength there. And then in absolute terms, we haven't seen a breakout yet. We had this gap down here. And with that gap down, you can see the intraday high before that was up at around 1950. There's your gap resistance. And you can see multiple tests of 1950 without being able to get through. We just got up to 19 and a quarter. To me, this is the wrong time to get into Booking. I would either I want to see the breakout, I want to see volume coming in, and I want to see this relative breakout of the S&P 500. If I see all three, then I would begin to consider a long position. Until then, I would hold off.
All right. The most popular in the chat room was Twitter. So we'll go ahead and do that.
All right. And keep in mind, a lot of these companies are getting ready to report earnings. I don't have all the earnings dates off the top of my head, but if you're looking at some of these stocks, I would probably flip through and make sure that when the earnings are coming. If you want to hold through earnings, that's fine, but I would avoid it if at all possible. Even great earnings reports, I think sometimes you see big moves to the downside. A lot of it's already built in, so you just have to be careful with the earnings. All right, Twitter had the big gap up. So far is holding the bottom of gap support. I think it's in a trading range. So I would be looking at the top side here around 41, bottom side right at that gap support, 34 and a quarter, 34 and a half. We're right in the middle of the trading range. I don't see a trade here right now.
All right, let's see. Next one up is VMware. Also very popular request.
All right. Yeah, this is one that I'd be careful about. And when I get up to a gap resistance area, I usually tend, just like price resistance, I tend to take my money and run, and let's see if it gets through. This is where we gap down. But intraday, after we gap down below 180, we came up to about 184. And then that's when the selling kicked back in, and you can see the heavy volume, sold off, went down into the 160s, low 160s, came back up. Look where the high was yesterday, 184. Now today we're putting in a bearish engulfing candle, starting to roll back over, down 5 points. This is in a great area of the market, software, and it was a leader until it reported its earnings here and gapped down. I think there's way too many other software stocks that look good. I think part of the reason we saw this big move to the upside is that, number one, software has been performing well. We saw a little bit of relative strength, but we are still way below where we were just a couple of months ago. And the fact that we're right up against this resistance, I don't like it. I would be in a different software stock.
All right, let's see. The next one I'm going to give you is CF Industries, our only materials request.
All right, that's CF.
Yes.
All right. Yeah, I mean, it's starting to show a little bit more. Nice hold here of the gap support with a bullish engulfing candle right at $44. You can see that the stock has definitely been strengthening relative to the specialty chemicals group. The group relative to the S&P has held the May low, but it's still in a downtrend. So this is a lot like Sherwin-Williams, to be honest. I mean, it's looking better. I think Sherwin-Williams I like a little bit more because it is breaking out above the high that we saw back in 2018. This one's not, but it is showing some strength. I would maybe just be careful, see if we can get through this other gap resistance area in here. This has been kind of an area where we have now struggled on multiple occasions last 2 months. So a breakout above 48.5, 49, I think would really start to look better, especially if the volume continues to build. And then I would be looking, as long as relative strength is strong, I'd probably keep a tight stop below the 20-day moving average.
All right. Since we are talking about relative strength week, I thought I would give you Apple and Western Digital. So those two are the next on the list.
All right. So am I comparing the two?
Yeah, relative strength. Which one would you pick? And then, annotate
both.
Both.
Okay. Well, Apple's been pretty good. I mean, off that June low, you can see computer hardware has been moving up. Apple's been leading. Apple is near its 52-week relative high. So I like that. Yeah, I mean, Apple, I like a lot of other stocks in technology better than Apple. It is going to have some overhead resistance. I'm going to say right around that 210 to 215 area right in here. You can see back here, a lot of support, broke down, came up, failed. If we get through 215, I think that'd be really, really big for Apple. And then we'll pull up WDC. All right, WDC, which is Western Digital. Let's see, it's coming off the bottom. It's probably shown better relative strength in the last 6 weeks or so than Apple. But I don't know that I like it more than Apple. I think one thing with these, companies like Western Digital, these disk drive makers and so forth, I think the problem is that they tend to be very cyclical. And so I trust Apple a little bit more than I trust this one. And so for that reason, I'd probably pick Apple. WDC, if I did go with it, I mean, it's trying to make a pretty important breakout here. Multiple tests around 55. If we can get that, that would be a good sign. But what I would do is keep my stop in probably at this 20-day moving average. Because like I said, when it starts to fall apart, it can really get ugly for a period of time. And you can see here, just really struggled and then fell back below the 20, kept moving lower. So I think I would go with Apple between the two of these.
All right. Let's see. The next one is going to be TTEC, TTEC Holdings.
TTEC?
Yep.
All right. Nice looking chart. Nice relative strength. Only thing I see on this chart I don't like is the volume. I mean, you go back the last year and there's only been one day where it's been over 300,000 shares. So that would keep me out of the stock. I like trading stocks that have probably average volume of 200,000 to 300,000 shares, not high volume in that range. So I would stay away from it just for that reason. But looking at the chart, yeah, this one I think looks really good. This is exactly what I like to find. All of these lines and relative lines all moving up from left to right. If you were in this stock at any point over the last 6 months since the beginning of the year, you would clearly be outperforming the S&P. Volume trends are positive. I like the stock. I just don't like the fact that it's not particularly liquid. So I'd probably hold off for that reason.
All right. The next one up is Live Ramp Holdings, and their symbol is RAMP.
All right, RAMP. Yeah, it's been ramping lower. Not overly excited about its relative strength here. So I think that's probably what I'd hang my hat on here. That's now been months. And I'll tell you another stock that reports tonight that's looking a little bit like this, where we had nice relative strength and now it's just been meandering along, is Chipotle. They report tonight, and that has not been a great performer relative to the restaurant group. It's holding up okay because the restaurant's been so strong, but that's one I'd probably keep an eye on after hours as well. Let's see what happens with Chipotle. But yeah, I mean, we're in a downtrend and that relative strength is weak. I'd pass on it.
All righty. Next one, and I was thinking about this one just the other day, how we hadn't had many requests for GE.
Right, GE. Yeah, we haven't talked about this one in a long time.
Right?
Yeah, it is still just kind of sitting here. I mean, I guess the good news is it's held this gap support from the huge volume at the end of January. Relative strength, again, not exciting at all. It's been going along for the ride with the S&P, which doesn't excite me. So I would pass on it for that reason, but I would watch this area around 1110, 1120. Huge gap up. If we can get back up and get through that area, maybe we do start to see some outperformance on GE. But for now, I just think it's in this range. It's closer to the upper end of the range, so I pass.
All right. And the last one is Sunrun. Run. And full disclosure, I do own this one still.
Yeah, I love the renewable energy stocks. This one definitely down today, having a rough day, but I think still, if you're looking for entry, this is probably the area 17 to 18 with a pretty tight stop. It hasn't been one of the best performers relative to the renewable energy space. So I think there are others. I know Enphase has been a huge performer. There might be some other ones in the space, but because it's in such a powerful group, it's one of those rising tide lifts all boats kind of stories. This one's got nice volume on the move to the upside. I like it actually in the 17, 18 area because I'd keep a stop below 17. I'd get out. But because the group's been so strong and it's got nice volume trends, I think the pullback from 21 down into this area is an opportunity.
All right. Well, then I will hold it. I am watching it. My stop's pretty low at this point based on when I got in. So maybe I'll tighten it just a wee bit, but I don't know. I'm still liking it. And that does complete the 10 in 10. Here are the symbols that we just covered and that Tom annotated. I will have these up in the MarketWatchers live chart list at the end of the program. So with that, as they say, we will be right back with the market update after this message. All right, it is time for our final market update. Let's check out what is going on in the markets. They are all up right now. Dow is up a little bit, actually about 70 points. S&P 500 up 8 3/4 points. NASDAQ is also higher right now at 0.13% gain. New York Stock Exchange looks like we're forming a nice little flag here. The NYSE is up 0.37%. And look at the mid caps and the Russell 2000. definitely showing some improvement currently on our market summary board. Russell 2000 is up 0.37%, which is right there with the NYSE and the highest gain right now. Treasury yields are up, reading currently at 2.064%. Volatility index is falling, and we are now seeing a reading of just under 13 at 1294. UUP is up right now, 0.42%. Nice gap up and consolidating that move right now. GLD, as expected, would be lower, and it is. Currently, GLD is at 134.04, down about 1/3%. USO also down about 1/3%, currently at 1164. And TLT bonds continue to slide. Made a little bit of a recovery, but are continuing again in that declining tops trend line, currently at 131.34. And that's all I have for the market update.
All right, I'm going to look, because this is Relative Strength Week, let's take a look at the Russell 2000, talk about an index that has been underperforming the S&P 500. This is it. Over the last 13 months or so, you can see this huge decline. We are now down at a relative low that we have not seen since back at the beginning of the bull market. That's a long time. It's been 10 years, more than 10 years, since we have seen the Russell 2000 relative to the S&P 500 at this level. So I don't know if there's a couple more lows in here, but if we go below this 0.50 level, we will be looking at about a 15-year relative low on the Russell 2000. So I don't know when the small caps are going to begin to outperform, but if the market wants to continue pushing higher, we normally do best when we've got leadership coming from the small caps. If you recall, the 2012 to 2014 period was very strong for equities. Russell 2000 was leading. When we bottomed in 2016, you can see the Russell 2000 led us out of it. I really'd like to see the Russell 2000 begin to outperform, but that's not happening just yet. All right, it's time now to move on. And Erin, I think it is back to you.
It is indeed. I am going to give you all a look at the momentum sleepers that I found out there. So let me go ahead and share my screen here. Basically what I did is I ran my technical scan for momentum sleepers. I'll go through it just really quickly, and then I'll show you the results I got this morning. But really what I'm doing is momentum sleepers, I'm looking for something that is in general beat down. That means that PMO, the price momentum oscillator, is beneath zero. And if you're beneath zero, that's usually you're oversold or momentum, you've been beaten down, so to speak. I want to know whether it is on a buy signal with a faster PMO line. Again, I'm looking for some momentum underneath the surface. And so while I use this as my default, 35-20-10, I use the MACD default to check whether the faster PMO line is greater than is on an actual buy signal. So you may not have it on the PMO regular default value, but you're getting it on the underneath, as I would say, faster PMO. And I also am looking for a fast PMO that has been rising for 3 days. Now, normally I just use the regular PMO, if you want to call it that, that's been rising for 3 days. I'm an intermediate term trader. I think these are really a little bit better for, if you're going to just use that as a default, more of a short-term trading, but I think that the PMO itself is much more successful and useful, in my opinion, with these particular defaults, which is why we set them as defaults. So that's how I determine whether it's a momentum sleeper. Now I put all of them, there are about 22, I believe, and I put them all in Candle Glance because this is how I determine whether I want to look at that chart or not look at that chart, just based on the basics of that chart. And a couple of the ones that caught my eye was first Apergy Corp. Just looking at the thumbnail, you can see a declining top trend line that's been broken and a move above the 20-day EMA. That's really what kind of setup I want to look at. The other one I came up with was ESI, And again, breakout above the 20-day EMA and a PMO buy signal in oversold territory. So I liked that look. Next one, just from the big chart here, was Halliburton, HAL. And I like the fact that we had the PMOs under zero, but we got a bounce or a bull kiss off of that PMO signal line. So I like the look of that. And it did make an attempt at a move. It looks like, well, we'll look at this chart closer. So I just giving you some of the main reasons. International paper I thought looked good. PMO buy signal coming in and that breakout above the 50-day EMA. Next one was MT. This one I saw a double bottom that caught my eye, and that breakout above the 50-day EMA looks like a gap. We'll look at that shortly. PDI, the PIMCO fund here, I've got the PMO turning up. And again, this is the regular PMO settings. This is what I'm always looking for. You look at that declining tops trend line and the breakout above both the 20 and 50-day EMAs. And then let's see, the last one I looked at was Molson Coors. And again, PMO buy signal coming in. So it caught my eye because I have this declining tops trend line. It looks like it possibly is beaten, but mainly that 50-day EMA, we saw a move above it. So when I get a candle glance, I can tell a lot of information just from looking at kind of the little thumbnail chart. And then that gives me my ideas of where I want to go and look more closely. All right, so here we go. The first one up is Apergy Corporation. And again, these are kind of beaten down stocks. They haven't necessarily been doing that well, but the momentum is beginning to build. And that's what I want you to see. So here's that declining tops trend line I was talking about that I could see just from the thumbnail. We got a breakout above that 20-day EMA. You can see the close happened right above there. And now we're trading completely above that 20-day EMA. And there's that PMO. Came down, gave us a whipsaw sell signal, but we're back on the buy signal. And you can see that the PMO has been trending higher. And what's been going on with price? It has been, the bottoms have been trending lower. So that's a good sign as well that momentum is building at this point. Couple of things. I mean, if you want to look at something you don't like, PMO is in decline. Or I mean, sorry, the OBV is in decline, and it's matching the tops with price. So that's telling you that volume is confirming that decline. I'll be interested to see if we get some good volume on today's move, and maybe we'll see that OBV come up and get either higher than the previous tops or start moving up there. All right. Next up that I talked about, we'll look at ESI. And ESI here, we have, let's see, nice move to the upside. PMO buy signal on the way. There's that move above the 20-day EMA, and it's making that move above the 50-day EMA. These can be, again, they're beat down, and that 50 has quite a margin between it and the 200-day EMA, but eventually you're going to get that crossover to the upside. If you're looking for sort of if you're a bottom fisher, this scan I think works pretty well for that. Next one I wanted to look at was Halliburton. I think probably some of you might own this one. And I think you'll be happy to know that even though we're having a bad day here, I like this PMO setup with that bounce off of the signal line. It's almost in positive territory now. You can see that, we had a rising trend. It did break, but that bounce happened just above support here at 21. So I thought that was encouraging. And then we got a really nice move to the upside to break out above that 50-day EMA. I would have to say that if I were in it, I would hold it. I think this could be an interesting play to get in if we can see price get a more decisive move above that previous tops or above that 50-day EMA. And just quickly, let's see, international paper. And there we go. PMO buy signal coming in, rising bottoms on the PMO, confirming the rising bottoms here. Breakout above that 20 and 50. We've seen it before and it has failed. So you want to pay close attention. Again, I think because those 50-day EMAs are below the 200-day EMAs, you have to be careful. And OBV volume, though, is looking pretty good. It's broken out from a declining trend. So we might be seeing some momentum under the surface that you might want to pay attention to. MT. There we go. That's that double bottom that I was saying. It's not necessarily textbook. It did come down into that pattern, but the rising trend before it, it's kind of iffy, but I still like it. Double bottom, there's the confirmation line, and it has broken out. I think you could also make a case when you look at this for an ascending triangle, and that's a good breakout. Watching that overhead resistance at that July 1st or looks like June 30th high. Again, look at that nice PMO movement. If we can get that PMO above that previous top, I think that would be quite encouraging. And let's see, two more real quick here. PDI, there we go. Rising PMO now. It has bottomed along with price. We're seeing price now above the 20 and 50-day EMAs. It did close above both of those yesterday. I'd like to see a continuation of that continue. All right, and then very end is going to be TAP. All right. Boy, that is really sounding good on this hot day here. All right, 4% move to the upside, which is a nice breakout here. PMO is on a buy signal. Again, if you want something to worry about here, the OBV is declining with these declining tops, but I think this is really encouraging to see that breakout above the 50-day EMA, and it's currently trading above it. That's all I have as far as momentum sleepers. So I will put that scan up in the MarketWatchers live recap later tonight. So if you wanted to copy that and use that, it will be available.
Sounds good. All right, we are going to jump into earnings spotlight. And what I wanted to do is just go over companies that have reported here in the last couple of days and just talk about some of the strength, weakness, relative strength, relative weakness, and so forth. Lennox came out yesterday. They did miss top and bottom line. They warned lowering guidance. I didn't like it when they gapped down and we had that red hollow. We were talking about that yesterday. I didn't think it was going to get back through those moving averages. You can see the stock is rolling back over again. It is now threatening to close at about a 4-month low. Lennox, I think, is in trouble here, and you can see the relative strength has just fallen off the map here in the last couple of days. Not a good idea to fool Mother Nature or Wall Street. And in this case, Lennox was trading like it was going to have a good report and then didn't. And that normally is not a good thing on Wall Street. All right, next up, AutoNation, AN. Huge move to the upside. Look at the volume coming in. I love charts that look like this. Big resistance here at about $43 coming across. We gapped right up above it. Big volume, and now all of a sudden, the relative strength versus its peers at about an 8 or 9 month high. So I think AutoNation looks great. Biogen, BIIB. I'd be careful with this one. It's been a very weak stock. Took that huge decline back in March right here from, 320 all the way down to about 230, and then it's just gone sideways. And while you might think, well, that's pretty good, it's been outperforming the biotechs. Well, the biotechs have been horrible. So outperforming the biotechs, I don't think is really a great thing, especially when you're barely outperforming after the huge decline. Stock right now, I think, has got a false breakout. If we get back through today's earlier high, maybe I'd revisit it. But for now, no thank you. Cadence Design Systems, I love this company. We were talking about this with Mark Chaikin yesterday. Beautiful chart, relative chart. They came out, they beat top and bottom line. Stock gap down, that's usually an opportunity, and it certainly has been today. It is now up about $2 off its earlier low. It could pull back into the upper 60s, low 70s. I wouldn't be shocked, but I think this is a stock that you want to keep an eye on and perhaps jump into if you get an opportunity. Brown & Brown, the stock has just been going up. Nice report, great reaction. Look at the relative strength breaking to a new 52-week high. That's one I certainly would keep on my radar as well. Whirlpool, big move down today. The stock, heavy volume. You can see we did break to an earlier high. The stock was up to 152. Now it's at 140. Big move to the downside. I'd watch that 50-day moving average. close below it, I'd be careful. Stock was trading really well relative to its peer group until the earnings came out. And for whatever reason, maybe it's just that a lot was built in. Wall Street, maybe we're seeing a little profit taking, but I'd be okay, like I said, down to 135. Beyond that, I'd probably be a little careful. HXL, talked about this one earlier in the show, but I definitely like this one. Relative to the aerospace group, it has been a tremendous performer the last 3 months. Look at the volume coming in. I'd be surprised if this one doesn't see higher days ahead. SWK, Stanley Black & Decker, got up to 152 today, and you can see looking across here, that is a major resistance level. We've been up there 3 times, couldn't get through. Lots of volume today, so far unable to get through. A close above it, pay attention, because this has been a stock that is among the leaders in its space. So breakout above 152.50 would be bullish. Fifth Third Bancorp trying to make a breakout. It's in the banking space. Of course, banks, as we've talked about, have not been very strong, but this has been one of the stronger stocks within the space, breaking to a new 52-week high today relative to its peers. And if it could close over 29, it would be the first time since back in August of last year. So Fifth Third Bancorp is one to keep an eye on if you like the banks. TransUnion, so far, I think this is one of the better reports I have seen. Stock was, on a relative basis, very, very weak performer. I think this could be a character change. And this is a perfect example of a stock that's going higher. You think, oh, this is a great stock. But relative to its peers, it's been going lower. It's actually not been a great stock. But it has been a great industry group. And now with this earnings report, this could be a leader going forward. I'd keep an eye on TRU. Hasbro, a big gap up here. I've talked about the relative strength versus the toys group. It has been a leader. Today we found out why. Great earnings report. Stock up 8.6%. I think this was the leader on the S&P 500 today. And then the last one, JetBlue, JBLU. I'm watching this one because on a relative basis, just a month and a half ago, it actually hit a new relative high, a 52-week relative high. And I'm not seeing a lot of selling on the volume. So I'm just waiting. I was thinking maybe earnings would be a catalyst to get this stock through $20. They did beat on the bottom line, but the stock is down from its earlier price earlier today. It is still up 6 cents today, but I want to get that breakout above $20, and I want to see that relative strength start to turn back up. Okay, that is it for earnings spotlight. And just to carry forward after the summary slide that you see on your screen, I wanted to talk just for a couple minutes, Erin, about this poll, because we got a number of big companies getting ready to report, and I've got my thoughts as to which ones are going to come out with some big numbers. I don't know if you had a chance to take a look at the list, but here is the list and the leaders. What do you think of the poll results?
Well, I look at it versus momentum. Honestly, I think all of these stocks are really strong. It was hard to kind of say which one I wouldn't jump on. I think PayPal, the momentum has, the PMO's on a sell signal right there. So maybe would skip that one. Facebook is starting to turn over, but it looks like an area of consolidation that I would expect. So, and Starbucks, which is number one, I mean, the PMO turned over in overbought territory. It's getting ready to give a sell signal. So I would be careful with that one. But again, I think all of these are probably going to do really well. What do you think?
I do not like Google. It has been a very, very poor relative performer in the internet space. So I don't know what's going on there, but I'd be very careful with that one. And Boeing, 2 of the 3 at the bottom. I think Boeing keeps failing at that 380 level. Mm-hmm. They got a lot of mess still to clean up. Those are 2 that I would probably be careful with. I actually think Starbucks is going to have a blowout report. That doesn't mean the stock goes higher from here. It has, I think a lot is built in, but I would be shocked if Starbucks doesn't deliver the goods when they report. And I think they report Thursday evening.
Yeah, and they're down, 1.85% currently. So maybe something enticing.
Yeah, it's always tough, when a stock's gone up as much as that one has. But if they report good results and they get a pullback, I would be jumping in for sure. It's just, the way I look at it, I like to find these companies that are outperformers, posting great results, and just let them get some profit taking. That's when I usually try to jump on board. Mm-hmm. Okay, still got a lot left for this week in terms of relative strength. So you want to stick around. You want to make sure you're here the rest of the week, but do want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live Airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday, everyone, and we'll see you back here tomorrow. Happy trading.